In today's video, I'm going to talk about a problem that many traders face, which is knowing whether supply and demand zones will hold or not. I'm going to give you practical tips so you can know this in real time. It's very common for traders to observe a trending market and consequently observing supply and demand zones working well in the last significant high or low. But when the trader tries to apply the same principle in the next market move, the technique fails. If that sounds familiar to you, keep watching this video and you will know how to fix the problem. Before anything else, there are a couple of ways of identifying supply and demand zones or supply and demand levels. In this video, I'm going to focus on a very simple and logical approach. In every significant price movement, you can usually spot a moment where either buyers or sellers have won the battle, so to speak. For example, in the price vector from number 3 to number 4, you can see that price goes up a little bit in the beginning, but you can see some buying action in the candlesticks that have those more prominent lower tails. We can place a horizontal line in the most well-defined of those points, which is the candle with the largest lower shadow in this case. Notice that at some point during that candlestick, sellers made price go all the way down to the candle low, but buyers appeared and made the candle close on its upper range. That's how you identify the demand zone or demand line in this case. By the way, if you don't know how supply and demand trading works, I have a free video course in the channel. You can check it out in the YouTube card in the upper right corner of the video. Eventually, price goes up to form high number 4, and then the buyers exhaust their energy. Naturally, price begins to fall once that happens. One of the ways of measuring this exhaustion is by using the Andrews pitchfork. To project high 4, you would plot the pitchfork in the extremes 1, 2, and 3. In this case, the pitchfork is too steep, so we use the modified shift version of the fork. High number 4 happens more or less at the center line of the modified shift pitchfork. It's not the best projection in the world in this case, but it's good enough. Notice also how high 4 is marked by a fractal candle pointing down. Once price starts to go down, you will start to wonder if the demand line will be able to hold price action or not. That entails the discipline of waiting for price to reach the levels you drew before without changing them. By advancing price, we can see that when the market reaches the level of those prominent lower shadows, it produces a clear reaction. Notice the low volatility on the bearish candles leading to the first touch, and then how price creates a bullish fractal candle with greater volatility twice at the levels that were pre-established. Notice that this is pure logical price reading. No momentum, no volume, no fancy lines or anything like that. Just observing how price reacts to the levels it creates in the recent past. Just for the sake of illustration, I feel the need to show you at least the pitchfork analysis that goes along with that though. The pitchfork placement here is straightforward. It's on market extremes 2, 3, and 4. Notice how the price level that tests the demand zone is also testing the pitchfork on the outside. In pitchfork analysis, when price fails to reach the center line of the fork and breaks to the outside, we have what's called a Haggopian's rule, which is an indication that price will reverse. From that point onwards, we can see how price sets off to the upside and create high number 6. Once again, the educated projection here is based on placing a pitchfork on extremes 3, 4, and 5 now. By advancing price, we can see how the center line captures the bullish exhaustion with decent accuracy. The important detail here, however, is in the price movement between 5 and 6. We need to establish the point where buyers won the battle and went to the upside. In this case, it's clear. We have a massive bullish candle out of nowhere. The new demand zone or demand line in this case is precisely at the open of this wide range candle. It could not be clearer where buyers have won the battle against sellers. If price comes back to this level in the near future, that's where buyers must show up again if this uptrend is to continue. As price begins to fall, you need to pay careful attention to how price reacts to that level, no matter what happens before. Once price eventually gets there, it gives you a subtle clue about what's going to do. Notice how sellers violate that level without any problem. Beyond that, the demand line, which should act as support, is now acting as resistance. All of this is happening before price violates low number 5. So if you couldn't identify the demand line from the wide range bullish candle, you would still think that buyers are about to show up. For those who saw the demand line being violated and then tested on the other side, the flow of the market already turned in favor of sellers. For those who didn't see the demand line, they are still waiting for buyers to show up, trying to catch a falling knife, as we say. This innocent and unpretentious candle right here is the exact moment the flow of this market changed to the downside. It has nothing to do with lines, momentum, volume, smart money, or anything else. All those things are auxiliary tools. By advancing price, we see that the flow indeed turned to the downside. From this point, you should start looking for supply zones or supply lines. The important thing, of course, is being able to spot the logical events in real time. Notice how this has absolutely nothing to do with the overly specific rules and nomenclature of things like smart money, Wyckoff, or Elliott wave, for example. Logical price action reading is a lot simpler and a lot more effective than that. With that said, all those other tools like momentum, volume, fancy line work, phase analysis, volatility analysis, and so on, they serve as confirmation to the backbone of your analysis, which is performed by the simple and logical reading of raw price. Without this ability to read the market logically, you can learn the most sophisticated trading tools on earth, and you will still fail. So this is how you know if a supply or demand zone will hold or not. In fact, it's how you know if any other technique will hold. I hope you were able to learn something useful that you can start applying in your trading right away with this video. If you enjoyed it, please help support the channel by clicking the like button, subscribing to the channel, activating the notifications button, sharing the video, and leaving your feedback below in the comment section. If you wish to learn how to trade using professional tools, please check out my website fractalflowpro.com or send me an email at support@fractalflowpro.com. Thank you very much for watching, and I hope to see you in the next videos. Take care.